Hey guys, we're here with two of my favorite guys, Josh Chilton and John McLaren. We are talking today about the 10 steps on the road to home ownership. So we're gonna give you all the juicy details, and we're gonna start with, if you're looking to buy a home, what is step one?
First step is talk with a lender. Period. End.
People don't like that to be step one.
Right. That's
People
true.
don't like that to be step
No,
one.
they
That's
don't.
true.
They're literally like, if you say, they say, why would I want to talk to the lender? First, I need to see if I like the house.
Mad.
They get
Sure.
mad.
They get mad
Yes.
if you ask that. Yeah.
Sure. Well, it's for two reasons. A lot of times, okay, first off, let's just say this. Don't be weird about this, guys. Like, don't be weird about talking with the lender,
Mr.
right?
Mrs. Consumer.
Right. It's really not a big deal, right? You wouldn't go to, the store shopping for a new pair of shoes without first, gathering a budget and having a limit and things like that, right? Because you know what you want. And so the worst thing would be to actually go out and look for a home and then realize that something isn't quite right. Let's say like the spike in interest rates that we just recently had that wasn't taken into an account.
Well, hold on. Let's stop even bigger than that. I think is that if you have a house, let's say in your mind, you're thinking, I can get qualified for $300,000.
Right.
But then when you actually talk to the lender, you can only get approved for $200,000, and you've been looking at homes for $300,000.
Looking at houses at 300 and you realize you can afford 200,
you're done.
You're not gonna like anything you see.
Everything's going to be downhill
All
from there.
expectations have been
True.
mismanaged.
And additionally, I think an even greater point actually is it's not what you can actually get pre-qualified for, but it's what you feel comfortable with.
Yeah, most people, it's not about that sales price number. Most people know, what am I comfortable with per month? And then turn that into a sales price. So you ask somebody what they're comfortable with for a sales price, and they'll throw you a spitball number,
Right.
an arbitrary, I think 300,000. And if you ask them, what does that mean per month? They don't know.
Right.
So
But they know what they're
let's
comfortable
real quick, let's just give people a glimpse of, because the other part of the process when we're talking about buying a house is we're also talking about which kind of loan you want, unless you want to pay in cash, which that's really kind of like, hey, how many people are just have that much
That's
money
rare.
that
I
they
mean,
pay in cash?
those people are out there, but that's not your typical buyer.
Right.
Typical
So
buyer is getting financing.
Right. So the point is whether someone's comfortable monthly allotment, is how I put it, is $2,000 a month or $10,000 a month. There's different factors involved that we're all talking about: current interest rates, down payment, loan type.
So let's talk
the whole
about
nine.
the three major differences between the different financing options that are available.
Well, in this area, of course, you've got a lot of VA eligible buyers, right? This is a
Right.
military town. If you're eligible for a VA loan and you don't have a lot of down payment to put down, the VA is going to be your best choice. That is an excellent loan.
Even if you have a down payment, it can still be some of the best options because the interest rates are going to be
if
some
your
of the
down
lowest.
payment is less than 20% of the sales price, VA is probably still going to be your best bet if you're eligible.
Absolutely.
And let's talk about the fact that you could actually get money back to pay off debt with the VA.
Yeah,
Have you ever had that happen?
Absolutely.
Okay.
Absolutely.
Give an example.
I've had people put in an offer to buy and ask for debt reduction. When they go to get pre-approved, they say you can get pre-approved for $300,000 if you get rid of your $5,000 credit card balance.
Correct.
And they don't have the cash to do that, so they ask the seller to pay off that credit card, and now
Yeah.
they're approved for $300,000.
Yeah, with
Or
a
a
VA.
car loan. One of my very first clients, that's what they did. They had an astronomical car loan. We did a VA loan. We asked them to pay off, and it was a good amount. It was like
Right.
$20,000
Another
in
thing
car loan.
that I've seen is somebody wants to buy, but they're in a 6-month more of a lease agreement. And you can also use that money to do a lease break. You
True.
can pay
it's
off
up to
the rest of your
10%.
lease.
So to give everyone an idea, per VA loan guidelines, a buyer can get up to 10% seller concession.
Now,
so we're
That's
talking $200,000. A $200,000 house, we're talking $20,000.
Now, I'd
Correct.
like to say, though, in this market, let's be realistic with everybody. Sellers are not giving away 10% for this sort of stuff right now.
Right.
It's a hot market. And
True.
if you come into the market expecting that a seller is going to give you a 10% concession, we've just mismanaged your expectations.
Correct.
True.
However, there is that case to where, let's say a buyer needs a little bit of extra closing cost, then we can potentially pad it into the purchase price, roll it in that way.
In some cases, that's right.
Given the fact that the home will actually appraise for that value, so there's just a couple variables. But yes,
but at least
that's
the
the
VA
benefit
gives you
of-
that option.
So
It
the
gives you that
VA
option.
really has two benefits. One, 0% down payment.
0% down.
And 4 to 10% back in seller concessions.
And good interest rates on those loans.
Right.
Good interest
Very much.
rates. What about the negatives for the VA loan?
The only negative for me is that it's got a VA funding fee. So most people don't realize this. A VA loan does not have mortgage insurance, and everybody wants to get rid of mortgage insurance, but the VA has their own version of mortgage insurance, which they call a VA funding fee. So I think it's 3.3% of the sales price that gets tacked on to the loan. So if you buy a house for $200,000, essentially your loan will be $207,000 when you finance in that VA funding fee.
and also
and that
too.
funding fee does change. So it's
I think it's first time buyers, it's 3.3. If it's your second time using the VA, it's different. So it gets a little more complicated, but I
Right.
think the first go around, if you're a first time home buyer, you're looking at 3.3.
Let's text Jessica right now and she can tell us the exact
Okay,
amounts.
all right. We'll get back to you later in the podcast.
Yes. Okay, so FHA, let's talk about that for just a second.
Sure. Well, FHA is the second most used loan type that there is, and it's because it's only 3.5% down. Okay, and so that's for
So on a $200,000 home, you're looking at about $7,000.
That's
and
correct.
you can get up to how much money back from the seller on closing costs?
that would be up to 6% on a FHA loan. So it's still a very high seller concession, and you can still do quite a bit with that.
And what are some things that those seller concessions, like what is it that can be used for? Talk about that for a second.
Well, it's not debt reduction like a VA loan, but just simply put, additional closing costs. I mean, it really all depends on
Sometimes
the
repair concessions.
right, but it's all about the purchase price amount. So generally speaking, the rule is right under 200,000, like 199 and below. Generally speaking, you're going to have more than 3% closing cost assistance in order to cover a buyer's closing
Yeah.
costs.
That's right.
And
That's
that
right.
doesn't include things like prepaids, which a prepaid is where you pay down the interest rate to lower the interest
Right.
rate. So you're
And
paying
then-
a lump sum up front. So you might say, look, I'm going to pay $3,000, and instead of having a 4.5% interest rate, I'm going to have a 4%
Right.
interest rate. Something
And then
like
I use that
200,000
strategy when I buy almost every time. Buy that interest rate down a little bit. That's
And
a good
it really depends on how long you think you're going to stay there.
Yeah.
And for me, I always advise people, hopefully they're going to, take that house, own it, then rent
That's
it
what I do
out,
every time.
and then move to the
I've
next
made
one.
it a mission that I will never sell another home that I buy.
I agree.
Ever.
I agree.
Every home that I move out of or move up to the next thing, it turns
Just
into
rent
a
it
rental.
out.
It turns
Right.
into a
It's
rental.
and
period.
it's the perfect strategy.
Yep, flip it over to a 15-year, keep it moving.
Yeah.
All right, so with conventional, let's talk about that. What are the down payment options and what are the pros and cons?
So conventional has a little wider variety of things you can do. You're typically looking between 5 and 20% down payment. 5% is your minimum, and
Other than a first-time home buyer.
Yeah,
first-time home buyer can have a
only.
3% down payment.
And like Navy Federal, for instance, has a 0%. It's got an astronomical interest rate. But
Pause button.
So-
Pause button on the Navy Fed, guys. Pause button. Not to step on anyone's toes.
You can get a 0%
but-
interest rate
No.
with one or two different lenders in the marketplace, but it's at like 6.5%.
True. But on that type of loan, it's a loan type that Navy Federal came up with, and it's extremely hard to qualify for. There's a lot of jumping hoops, and at this point in time, I'd like to actually just jump into Navy Fed as maybe an alternative option that's not so great as far as a lender, right? So they're great at.
We honestly, and first of all, we want to say this, like we value our military and we
For sure.
don't want to say anything about Navy Fed, but in our experience, and we've sold thousands, gang, thousands and thousands and thousands of homes, and we're seeing over and over that our two favorite lenders are Movement Mortgage and Atlantic Bay.
That's right.
And they will work hard at beating you. In my opinion, you really honestly should get two different rates.
Right.
And because this is something that's 30 years that you're paying for. And imagine if you're just getting $100 a month, that adds up to what?
100 a month is 1,200 a year. 1,200 times 30 is 36,000. 36,000 over the life of the loan. That $100 a month difference.
So you definitely should get two different opinions. And Movement Mortgage and Atlantic Bay are two.
And it doesn't hurt you to do that as long as it's within a 45-day window.
But I guess to go back to the conventional is conventionals aren't as strict. Like certain banks can create a conventional that only they have. So when I talk in general terms, 5% to 20%, but there are some exceptions. Different banks have different conventionals, 3% down, 0% downs. But typically, 5% is going to be your minimum down, and you have the option of the lender paying the PMI or you paying the PMI on a 5% conventional. And that is a great option because the lender paid PMI costs less per month. So that's what you want to do if you've got 5% down for conventional. Now, your best loan option is to put 20% down always.
Absolutely.
That is where you truly get rid of PMI, and you don't get rid of it in exchange for a higher interest rate. You're actually getting rid of the PMI if you have 20% down.
Best case scenario by far, 20% down on conventional loan. And that makes it exceptionally good for resale down the road because you put down, you pay down your loan, and so you have instant
You're a
margin.
very secure borrower.
Exactly.
So your interest rate's going to be the best. Your down payment's going to be high.
All right, let's move right on to number 2, which is to refine your home search and really figure out what your wants and needs are. So what would your opinion on this be, step 2?
Well, you hear a lot of people, they throw out a lot of wants, and what we want to boil that down to is your needs. What are the things you absolutely need in a home? People will say open floor plan, big kitchen, big yard, and those things are hard to search for, right? We're gonna tell the computer what to search for, and the computer can't search for those things. So we're gonna boil that down to searchable criteria to get you all the inventory that gets as close as possible to your match.
That's right.
What is the benefit of, because Zillow and Trulia and all these online, I see a lot of these people just doing these searches. What is the downside of just going on Zillow each day?
Availability, number one. I can't tell. I just got a call yesterday from an interested buyer, and both properties that he was interested in were not available, meaning they were actually under contract. And they were under contract for a very, very long time because Zillow just simply does not show that.
Zillow does not.
And when I
update
actually
that.
did a live MLS search, okay, it's what us agents and brokers have access to. When I actually did a live MLS search, there was 0 homes available in his criteria. That explains the listing shortage, that we've been talking about for quite a while now. And so what's very good is that, he was actually driving around to these neighborhoods and to the house and all this kind of stuff, wasting
tons of time and money,
rather than just getting with us, let us doing an active search and going in there and picking houses for him.
Because a lot of people, my sister being one of them, my sister's actually a doctor. And so this was a few years ago, but when she was buying her first house, and she was talking about, she was like, well, how much commission do I have to pay you as an agent? And I'm like,
oh, that's you. That
was her question.
Yeah.
She was like, how much commission do I have to pay you? Basically, I'm your sister. Are you going to give me a discount?
Right.
And I was like, actually, so tell her what the answer is.
Yeah, a lot of people don't know that the seller, 99.9% of the time, the seller is paying for your agent if you're a buyer. So you get to pick an agent.
It's like you're not saving it. A lot of times people are like, oh, I'll just do this on my own.
Right.
You're not saving any money. You're just adding yourself more headache.
The seller
and
has made an
hassle.
agreement with the listing agent for a fixed amount of commission.
Correct. And
it's either that agent shares it with another agent or takes it all for themselves.
Exactly.
But the agreement is made. The seller is paying a certain amount of commission, whether you get representation or not. So essentially, your representation is free, and buyers out there in the marketplace who don't have representation are making a mistake because they don't have to pay for it.
And let's talk about, as they're doing that search, we want to figure out, what do you want, right? Do you want a condo? Do you want a single family? Do you want a townhouse? Let's start with condos for just a second.
Sure.
What do you guys think are the pros? I'm going to keep my mouth zipped
Low
for a
yard
minute.
What's your opinion?
I'm not going to give mine.
No, I'm in your
mine.
camp as well.
Let's hear what you think. Let's give both sides. What are the pros? What are the cons?
Number one pro to condos is low yard maintenance. I have to say.
Yes. And that can be really good, depending on your...
Like it.
Yeah,
My
absolutely.
next door neighbor, honest to God, she's the sweetest thing. Every time I see her, she's out in the lawn, and I'm like, I ask her, I'm like, can you not like afford to find someone to do this? She's like, I absolutely
love it. I don't understand that. I personally I personally don't enjoy it, but however, you know, low yard maintenance is not just a want or a desire, but it's an absolute necessity. A lot of condos, of course, have elevators and things like that, so they're great for the elderly. You know, they'll move out of a 2-story house and move into a condo, and then they have amenities. And
I find low yard maintenance is also really good for our military. For those young Navy guys that are deployed half the year, every year, that have to worry, is my grass 8 feet long right now while I'm in Bahrain or something?
By the city and all kinds of stuff.
I also think the one thing I do love about condos, a lot of them do have some nice amenities like the clubhouse,
you might have a pool that you don't have to pay for.
Some other things like, you know, I have a friend of mine, actually it's my husband's sister, and she literally she has a pool in her backyard,
and she closed it to
and she's closed
filled it in with dirt. You mean?
No, she just covered it up,
right.
And she has sworn that she's not going to use it. She's like, the headache of just cleaning it and the maintenance of it, she's like, it stresses me out.
Right.
She's like, we'll just pay $30 or whatever.
She'd probably love a condo, right? Where someone else takes care of the pool.
She just doesn't
gets
want
all
to
the
lie every
enjoyment out of
night, getting her laps in.
Get all the enjoyment out of it without all the hassle.
Exactly.
But those are I think most people who are thinking a condo will work well for them are thinking about those type of things.
Someone who travels a lot for their occupation.
Low maintenance. Security, perhaps, depending on the community.
Yeah.
True.
Sometimes views. I mean, there's some beautiful, we live in a waterfront area. There's some 20-story buildings where you're on the 20th story.
Or what about the condos on the beach?
Right.
Like you wouldn't be able to afford. You wouldn't be able to afford living on the beach.
Right.
But with a condo, you can.
If you live on the 20th floor facing the bay, believe me, that's a beautiful.
Now, and then that absolutely rolls into some of the cons, which is which is a condo right on the ocean with salt air. You can imagine that the condo fees are going to be extremely elevated for the exterior maintenance because, as you know,
and I think list of cons.
There are, and I will tell you my biggest one, and this is one that I like to say very loud and proud and say, listen, this can happen, and we want you to know about it.
Right.
So immediately you can get assessed a $24,000. I've seen $36,000. I've seen even higher, where they literally say, well, you know what? Either we mismanaged the condo fees,
or just a new roof,
or we need to get a new roof, or their funds are getting low. We're assessing. We want to get a new roof, new siding, new windows for everybody. Everybody now pitch in $24,000.
And there's a certain amount of time which it must be repaid in.
Or you have to pay additional fees on top of that.
They'll put a lien on your property. You'll start getting collection letters.
And then as far as the rentals, right? So let's talk about that. So the military guy that buys a condo for the obvious reasons why we said, he goes on deployment. Let's say he gets transferred or PCS somewhere else out of the area and he wants to rent it. Well, he may not actually be able to do that because there's usually only a certain amount of rentals per building or association that is actually allowable. So he may not actually be able
What
to.
about pets? What about pets?
Right. Yeah.
Frisky's not coming. I'm sorry. He's got
you don't know that. Frisky, as long as Frisky's a 12-pound cat.
Right.
Depending on how much the dog weighs, how much the cat weighs, you can only have one or two. Yes, exactly.
Or there could be breed restrictions.
And there could be breed restrictions.
Let's talk about the potential to lose the ability to use a loan to purchase a condo.
That's what I was going to say.
So let's talk about
I've got
that
a
for a
condo
second.
listed right now.
Okay.
So do I.
It's approved for VA loans.
Okay.
And it's approved for conventional loans.
Exactly.
Unfortunately, at this time, no FHA loans are allowed.
And why?
It's probably in the same complex. I have one exactly like that.
There's a couple of reasons why a particular loan type might not work in a neighborhood, and one of them is what you just said, Josh, which is the rental to owner ratio. A lender is going to have a renter to owner ratio in the community that has to be the right ratios in order for them to lend. The other thing is what percentage of the units are currently delinquent on their association dues, and that would include special assessments. So if the neighborhood everybody just got assessed $24,000 per unit, and half the people haven't paid yet,
you can guarantee
no loans are allowed in there.
Yep, right the FHA eligibility is going out at that point.
Which, in my opinion, is smart because I feel like the reason why they
Smart
do
for the
that,
lender?
yeah, smart
Oh,
for
yeah,
the lender.
sure. If I was lending my
If
couple
I was lending my
$100,000,
money, I wouldn't want it.
those are a high default risk.
It's understandable. It's simple factual information that just err on the side of cons at this point
Right.
for the average consumer.
All right, well, we have to speed up because we're only on number 2.
Uh-oh.
So we want to get right to number 3, and that is obviously make an offer. Any tips on that of making an offer?
Well, that's where it really becomes critical to have an excellent agent. I mean, there's a lot
They
of
are
agents
legal
out
binding
there.
So give us a
documents.
couple of examples of things that maybe someone has experienced with another agent. Maybe a lot of times people come to us and they've already had some
They've
bad
already had a bad
experience.
experience, yeah.
Including
and with
all
other agents
contingencies,
and other
perhaps.
companies, and so we say, okay, we want to fix that. Give us some things on that you would say.
I mean, first of all, when I go to a house with a buyer, I'm pointing out some potential flaws because I have a background in construction. So we're knowing going into the home inspections the things that we're looking for.
Right.
Because home inspections can be pricey. So if you go in just with blind eyes and now you got to pay $400 for this inspection,
let's just say-
$400 for that inspection.
I
Or
save
let's
people
just
that
say-
$400 on a regular basis by doing a mini home inspection at the showing.
Exactly. Like for instance, I've seen, whole walls completely taken out. No header installed. It's very crudely done.
I got one like that right now.
I've even seen to where the owner of the property was actually an agent, which was scary. He actually nailed down a carpet runner over the bottom plate where the bottom of the wall was on the floor, and the whole wall was bowing and sinking down. And I'm standing there looking at this thing, and I'm saying, "Yeah, we need to leave. This is crazy." Because if they're willing to do this where everybody can see, what else can you not see in the crawl or in the attic?
But let's flip that. If you weren't experienced enough to point that out, and everything else was shiny and looked good, and that buyer now they waste 2 weeks of time. They waste $400 on a home inspection, and now 3 weeks from now you're $400 poorer and back at square one because your agent didn't know what to look for.
In that 3 weeks, you could have missed the perfect house because it came on and came right back off.
Very
and
good
additionally, contingencies, right? Let's say an agent or someone who's representing themselves does not know to include all their contingencies. Let's say that they have a home sale contingency or a lease contingency, and per their lender, it is a loan requirement to rent or sell their home.
And a lot of people are in that situation.
Yeah, and absolutely, that's perfectly normal. But
gotta sell your house before you can buy a new one. I mean,
exactly, but they don't include it on
Right.
the legal binding document that they're going to be submitting to the other side.
Now
then
their house doesn't sell,
there's a problem.
and they're under contract on another one.
Yes.
And they default.
Yes.
And the repercussions for default.
All right,
can
I'm
be
going to
steep.
keep us moving. Let's go to number 4, which is negotiate the offer. So, what kind of tips would you say? Give us an example of a time where you really just did a great job of negotiating for your buyer.
I had one just the other day.
Okay.
It was the first day on market. It was Easter weekend. And we went out there on Saturday evening, the first day that it came on, and we submitted an offer that night, Saturday night of Easter weekend. And we found out that there was another offer on the property, and these people wanted this house so badly.
Right.
So when I found out there was another offer, I took the time to write a long letter. These people, they went to the same school district this was in. Their parents lived in that neighborhood. They had young kids, and they were so excited.
Those
kids,
letters really work.
so I wrote a letter to the people. I called the agent. A lot of agents will just fire off the offer via email, very
It
impersonal.
won't even let you know.
I write the letter. I call the agent. I tell him all the same things over the phone. I tell him how bad we want it. The agent, kid you not, calls me back and says, "You're behind, but your story was very touching to the seller. If you can get to this number, you win." And
Right.
and we won. We just came up and we tied the other offer and we won.
What he's saying, guys, is that he's selling himself and his buyers, not just the numerical value of offer price, seller
People think
concession,
negotiating
things
is
like that. It's
dollars
not.
and cents.
A lot of
It's-
times, and so that's exactly what
Just
you're
going
saying.
above and beyond.
Exactly.
And that's really what our company really stands for, is just going that extra mile. So let's move on. Number 5, ratified contracts. So ratified means when both sides agree on every term.
Us agents throw around that term like everybody knows
Yeah,
what it
and
is.
it's-
Right.
And they don't. Ratification is when there's a meeting of the minds between the buyer and seller, and everyone has signed off on the contract.
And let's talk about some important timelines, right? So like there are some things
that's a
so
good one.
important.
You have 10 days to do your inspections, for instance, and I have.
Well, hold on.
You negotiate for that term,
right?
but let's say most of the time, let's say that your offer has 10 days.
10 days, yeah. So you write how many days you want. You could say 7, you could say 3, you could say 10. I'd say 7 to 10 is the average.
And I've worked for sellers before where the buyer's agent sends over the list of repairs that they want on day 11 of a 10-day timeline. And guess what?
Sorry.
Right.
You don't get any repairs. Sorry.
And you're locked in.
And you're locked in. There's nothing you can do about it.
And you are moving forward to
And I will
closing.
say this, guys. This is what I love about these two guys and the agents, that work at our company, is that we know these contracts inside, outside, and backwards. And that's what you're looking for. You want someone who knows these contracts. So because some of these people who don't know the contracts well, they'll do things like that, not intentionally.
Oh, not intentionally.
But it really puts yourself as a buyer in such a bind. So that's a great one. What's another one?
I mean, that's exactly the one that I was going to say. I mean, also too with
termite.
Yeah, it could be termite. Also too, applying for the loan. Okay, contractually.
Or other inspections. What about like a lot of times people will have a pool. They have a hot tub. You need to put those additional, because like some of the home EIFS.
And it really behooves you to have an agent that does a lot of transactions, because they have likely picked their inspectors very carefully after hundreds and hundreds of experiences.
That's one thing that buyers don't do, or that consumers don't do. They really don't interview buyers agents. A seller, interview 3 sellers agents, and so forth and so on. And that's one of the reasons why a lot of buyers are timid to actually building a relationship with a buyer's agent to represent them. Our number one job is to protect them. It's not to help them buy a house, actually. Yeah. And so if it makes a buyer feel more comfortable, interview an agent. They want somebody with the transactions underneath their belt, with the tenacity underneath their belt to
and
fight
right now,
to get
I
them
think
what they
this is
want.
a good time to just really talk about as you're choosing the agent that you want to work with, since you're not paying for anything as the buyer side, so might as well get that help.
They are representing you. They are going to earn that money.
They're going to earn that money.
Very much.
And what makes our company different at Chantel Ray Real Estate of why they would want to work with us as a buyer side, along with all these other things, but just specifically different?
I think it's putting our clients' interests above our own. If you are doing a good job as a buyer's representative, you are acting more as a matchmaker than a salesperson, right? You want to facilitate the sale after someone falls in love with the property, as opposed to walking into the first one and this is the one you should
trying
get.
To sell them every house.
And within 90 days, if you don't love the house that you purchase within the first 90 days, we'll sell it for free, because that's how much we know. We're not going to just sell you any house. Right. We want to make sure this is the perfect fit for you, okay? Let's talk about never being stuck in a long-term contract, because we do have by law, we're going to talk about the buyer-broker agreement. So people are going to ask you to sign this.
And that's the reservation I think a lot of buyers have, is when they get into the marketplace, they are hesitant to meet with a buyer's agent because they know that there'll be a contract signing and they'll They've picked their agent.
We're actually legally bound that we can't talk about certain things such as value or sales price or things like that. Certain things pertaining to the property and the transaction unless a buyer representation agreement is in place.
But we will let you out of that if you're unhappy. I want to be continually having to prove my worth to you. I want you to be able to cancel.
We want you to be wowed.
Customer service is number one.
If we didn't have to do the agreement, I wouldn't do it, until we found a property, because I want you to feel like I'm going to continue to give you great service until you find something.
My biggest thing that I want, and I know that you'll agree with this for you as well, is I want our buyers to feel comfortable, because it's very invasive. You're getting to learn about someone, their family. You're meeting the whole family. You're taking them out.
They're telling you about their finances.
Exactly. You're building a relationship with them. It's very important for them to feel comfortable.
It is, and they're only going to feel comfortable if they know that if you stop answering the phone, they're not locked in.
That's it.
And from 8 a.m. to 9 p.m. so that you can get the price of, if you're just out and about and you're driving by, you can call us at 717-1003 and get the price of whatever house that you're interested in. And we also will give $1,000 to the church or charity of your choice. Talk about that, Josh.
That's correct. Okay. So we have predetermined criteria that meets our mission statement of what we're trying to do. One of those is people in need. Okay. So we like helping actual people in the community.
In Hampton Roads.
That's correct. In Hampton Roads. And so absolutely, it's exactly what you said. So with every transaction, as long as that church or charity meets up with our mission statement, like helping individuals in our community, we'll donate $1,000.
And we need you to apply for that before your transaction begins to disclose that church or charity of your choosing. Say when you buy or sell with us.
So either go to chantelray.com/church or chantelray.com/charity.
That's where to go.
All right. So step 6 is gather up all your required paperwork and give it to the lender. So like what kind of things are they? Let's prepare them for some of the things
Sure.
they're going to ask for, because I've seen buyers get very frustrated.
Yes.
Because they're like, oh my God, what else are they going to want?
They want my firstborn child. That's the one I hear all the time.
Expectation is key.
So,
That's
yeah,
exactly what we're
let's give them
talking
the
about.
Expectation up front. What are some of these things?
They're going to want to know everything, right? So taxes,
I think
pay stubs, bank statements.
Yes, those are the basic ones. They're going to run your credit. They want to see your last 2 years of tax returns.
They're going to have already, because now we're on step 6. So they've already run their credit.
True,
at
to get
step
pre-approved,
1.
get pre-approved, right?
But they might run it again.
But this is what to look for at the very beginning. I mean, you need to give some of this stuff just to get pre-approved.
So some is in the beginning, and then.
All right, so let's pause really quick and let's talk about the two different things that we're talking about. Number one, we're talking about getting pre-approved, which is the initial thing to do, and then you're talking about applying for the loan, which comes after ratification or going under contract, right? So pre-approval is a simple 10-minute phone call to the lender. 30 minutes later, a pre-approval amount is given.
And the things you need to have ready for that is prepare to have your credit pulled.
Yes.
Last 2 years of tax returns. Last 2 months of bank statements. And your last 2 pay stubs. If
For
you
that
have those
beginning
things
call?
together, you're...
No,
It's
so
not
that's
verification.
That's not the beginning call. I would say they're going to.
I don't think it's any verification. It's just basically how much do you make? Do you pay child support? Do you pay alimony?
Yeah, I would say
Things
that
like
would be more like. If we had to say 3 steps,
I would just
maybe that's
recommend you
step
get
2.
those things together.
Getting ready,
Yeah.
You
Because
don't-
on the first call, they're basically going to say, "What's your social,
date of birth,
how
much do you make? Give me some of your debts.
Right.
Do you pay child support, alimony, things like that.
You know, once you get
So applying for the loan is simply verification of all the things that you said upon your pre-qualification in that 10-minute phone call. So that's the taxes, that's the pay stubs, the bank statements, everything like that John was explaining out. And simply put, it's all very time sensitive. Okay, so if the lender asks for something, it needs to be given as soon as possible, within 24 to 48 hours.
Another thing I've seen buyers get frustrated. So let's say they gave them like the last week's paycheck or whatever it is. But let's say your contract fell through or something like that, and then you ended up writing another one. Then they might say again,
I need
people are frustrated. Why do I have to update this stuff? I already sent you my bank statement.
Information.
Yes.
That's where people, I think, get frustrated.
And that's the big one. And let's touch base on
But we're so
all
fast, you don't need
Yes, true, exactly.
In this market, no one's updating anything because
No.
it's like you get pre-approved, you get in the house, and boom, there it is.
True. Well, let's touch base on our business owners really quick. John and I were talking about this before we started, and our 1099.
Some people have a little more complicated financial situations than someone who's a W-2 earner.
So run down a couple of those things.
Well, the honest thing is that business owners oftentimes
Write off too much
are
stuff.
doing their taxes in a way that minimize their tax obligation, but that also minimizes how much money they
buying power.
show
Like,
that they
did
make.
you see how I'm like, write off too much stuff?
Yeah.
And he
Yes.
said it like so elegantly.
Yes. It diminishes your buying power because
Ooh, I like
basically
that.
because here's the thing with 1099. Okay, they want to take the sum of 2 years' income. Okay.
And believe me, we know how to do this. We're all 1099.
Exactly. That's exactly right.
We know what we're
so
talking about.
one good thing for business owners out there that are thinking about buying within the next 5 years or so, yeah, I get it. You're heavy on the tax deductions. You're paying yourself minimal. You're an LLC, whatever, right? And then, but 2 years out, go ahead and start reducing
yourself more.
Exactly, reducing the write-offs, paying yourself more because again, it's the sum of those two years.
All right, let's talk about number 7, which is scheduled inspections, including home, termite, pool, Any advice on that?
Chimney, fireplace,
Chimney's a big
EFIS. You know, a lot of EFIS homes in this area.
So EFIS is very particular in this area because we have such a high.
Oh, I got a funny story for that
Okay.
one. So we were looking at houses, and it was, the EFIS is so pretty, right?
I like the look
One
of it.
time I had a buyer, and we were just looking, and we were waiting on the wife. The wife was like slow as molasses in the car. The husband leaned up, leaned up against the EFIS and
went through. Oh my gosh.
Oh my gosh.
Yeah.
Completely
Needless to
You break it, you buy it, right?
that house we didn't buy.
You did not get that.
All right,
one,
we're
yeah.
running out of time. We've really got to wrap it up here. So number 8 is purchase homeowners insurance. And for me, I want to chime in here because this one is really important. It goes back to what we said. Even if you're saving $50 to $100 a month, that really adds up.
Yeah.
And we've worked with a lot of different companies where they can search for the best price.
They're an insurance broker, so
Yeah.
to speak. Yeah.
All right. Number 9, transfer utilities. Anything we need to say about that?
Make a couple
Kinda-
calls.
Just do
post
that
date
ahead
it
of
out.
time. You know, a lot of people get to closing day, and you're like, "Did you transfer the utilities?" Oh, I forgot.
That's
Yeah.
probably one of
Yeah.
the easiest parts of the
Yeah.
transaction,
Yeah.
really.
It's kind of obvious if you're moving in someplace. You know, turn
Yeah.
on the water and electric.
And you know,
in
if
your
you're
name.
transferring utilities, you're very, very close.
The
And
seller's
then-
not going to continue to pay your electric bill.
Yes, and number 10 is closing and congratulations. One of the things that is interesting about the closing, I remember a couple people, they don't realize a lot of times we close at the attorney's office. So a lot of times people they think, oh, we're going to close at the real estate office.
Sure.
That'd be one thing that I could think that's a little
I
bit
think
off.
a big thing that's in conjunction with closing is the final walkthrough. You do
Oh,
get a
yes.
final inspection the day of closing. I always make it for my buyers, so we do that right before we go to
Right
closing.
before.
Some agents I see, like on my listings, they'll
don't
do
get
their
it.
final walkthrough 4 days before closing.
I don't get it.
They literally
Before
could
move out.
They could take their buyer to closing
Oh.
and close on the house and come back to a home that's burnt to the ground.
Exactly. Or
Yes.
We want to
Or-
minimize the chance of
or
that. That's
simply
kind of a
put,
big deal.
Carrying out your personal property and putting a hole
You know
in
one
the wall.
thing.
Yeah.
You know one thing that I've seen over and over again is things like, let's say the house is empty. This just recently happened at one house. The seller went back the day of, took the refrigerator was in the contract. They took the refrigerator and the wine cooler.
Yeah.
And
If you didn't go to walk through
but
that day?
you went to walk through 3 days before.
You didn't see that.
And you didn't
And
see
guess
that.
what?
And he now is
Guess
gone.
what? There's no recourse. After closing in this state, there's no recourse.
Yeah.
I find that the biggest part of closing day is that walkthrough. Like I had one not too long ago where we showed up to walkthrough and the water heater was in the garage and it was leaking all over the place. And
Yeah, you told me about that.
we had to figure that out. We were an hour before closing and we had to figure it out. And a good agent is going to not lie down right there.
No.
You know, some agents will be like, "Oh, well, it's closing day. You got to close. You know, what can we
Yeah.
do?"
No, absolutely
we're
not.
going
I've
to
seen a
bat
lot
for
of
you
people,
right
yes.
now.
We're not.
going
No,
to bat
that's-
for you.
that's-
We are going to fight for you. That's
Yes.
the thing. You
That's
don't
the
want
thing.
a weak agent that's just going to lay down and roll over.
Or that this is the first time they've seen something like that. That's the biggest thing.
John, Josh, thank you so much
Thank you, Chantel, for having us.
for being on our show. We want to give you this free brochure that talks about this 10-step process and even more details. More details on the pros and cons of condos. If you want, just download we can download this, or we can mail it to you, or we can hand it to you, whichever one you want. Thanks so much for joining us, and until next time, see you later.
Bye, guys.